Okay, so happy March. I haven't been here in a couple of days, partly because I've been super busy, but also because the market's been kind of boring. A couple of days ago, I called out that there was bullish divergence building up over the past few days. It's most obvious on the 4-hour chart, which is pretty significant. But if I just scrunch this down a little bit, you can see that after we broke out of the range, it was a steady downtrend. But momentum started dying off last week, and you can see that it started to the RSI is creating higher lows, but price is creating lower lows. Obvious divergence there. Now, not sure how long this can go for, but the fact that it's going for, well, let's see, starting from Thursday, and this is so it's literally a week worth of divergence on between RSI and price on the 4-hour chart, which is probably going to translate to the daily chart. Well, okay, I guess the lows aren't as obvious on the daily chart. So this is why you got to use different time frames to focus on what's actually happening. If I go down to the 1 hour, it's it's not quite as obvious because there's more candles. The 4-hour is really where it's the most prominent, but it does mean that it's happening. Prices are going lower, but the momentum, the oscillation of the strength is going up. So that makes me believe, like, I'm interested in longs right now, but I'm not interested in longs just anywhere. I got picked up on a long yesterday, even though I didn't stream about it, off the 500, completed a quarter, just barely, before it started consolidating again inside of the quarter. So in a situation like this, and this is on the Dow, the Dow that usually gives me the most runway in the least amount of time. So it's very slippery, but there's the most opportunity as well. It's high risk, high reward kind of situation. But the S&P 500, which for quarters trading is a slower moving asset, I guess the divergence here isn't as obvious, or there isn't one. There isn't one from, well, I should zoom out and then it'll show itself. Yeah, okay, so there it is. So it's not as obvious starting from February 23rd, last Thursday, but between this low and this low, it becomes more obvious. So starting from Friday to today, it becomes more obvious. There's really not much in terms of opportunity, in terms of a runway to actually gather points. In order to do something like that, I would have to change up my strategy, and that's too disruptive. Uh, there's more to my overall trading routine than just what I stream about here. This is just what I stream about for my manual efforts, but I have a lot of AI and algorithmic stuff going around on the back end, which affords me the opportunity to experiment and just kind of be loose and psychologically be more relaxed and not have it be such a high pressure situation. Because, to be frank, my automation strategies for both long-term wealth and short-term income are producing, the bots are better than I am. They're producing more profits than I am here by myself, whereas I'm just kind of chopping around. So this is just me refining my skills, and for me to start working on a different skill, a different strategy to adjust for the market is too disruptive to my personal routine. So this is a time when, and I think it's just overall smarter to not change that up unless you're like already a pro. You're already so good at so many different things that you've over decades worth of experience. that you can afford to do that. I don't believe I'm at that level. So that means that for me, that was just a long way of saying I'm going to stay the hell out of the way of this. Right now, it's just really messy. It's kind of a range on a smaller time frame, and we've established a little bit of a range between the 3,000 and the 500. Right? We don't really know. It's like lower lows and then higher highs and then lower low. Like it's a little bit messy. It looks like it wants to reverse up, but it also looks like there's a lot of resistance somewhere, everywhere. So it just looks kind of messy. On the higher time frame, the one adjustment I could probably make is on the higher time frame, which I already kind of have here, to play the bigger levels for the shorts, because even though it's not that strong of a trend, it is still a downtrend. On the higher time frame, we seeing a consistent lower low and a lower high, but it's just really messy along the process, and we're seeing a divergence. So not enough momentum up to go long, except to take these tiny little counter trend moves that I barely got a quarter out of. I mean, maybe time will tell if I could have squeezed out a whole, 2 quarters, get it all the way up to the top of the range here at the 3,000. But right now, I'm just trying to stay out of its way, and I'll take the sell off of the 925 here. I should probably note that the reason for this sell is for this zone right here. So I'll put the market right there. Sell at 32,925 for one. That's the quarter, and I need 2 pieces of confluence. In addition to it, it's zone. What is that? What kind of zone is this? Rally base drop. Rally base drop. Zone. And oh shoot, did I just lose it? Damn it. Oh no, it's right there. The rally base drop zone, and well, we'll have to see as price gets there with the RSI. Okay. $60. So check when it's near. Oops. Okay. And with this one, I didn't mark it at the time, but the reason for buy at 32,500 is 2 pieces of confluence was divergence, and the second was the RSI was above greater than 40, I believe, but I forget what time frame it was. It wasn't on the 1 hour. It was on the 30-minute. 30-minute. Honestly, it was a very choppy entry. It was during the morning chop. Look at all these. This is how ugly it was yesterday. I had I was playing this zone to be broken. And it worked. I was lucky that it worked out. But usually when you see this kind of divergence, the next one or two quarter opportunities below it tends to work out. I'm not sure what kind of percentage it is because I didn't do that degree of back testing, but it tends to work out enough, right? At least like 40% maybe, ballpark. It works out enough that it's if you do the 3 to 1 quarter or 3.33 to 1 quarter strategy, it pans out profitably, and you don't mess with it. This one was one such case. Pulled a quarter out of it. Um, this one, yeah. So the momentum was above 40 throughout the entire morning on the 30-minute. And I was just like, okay, it wants to, like, all this consolidation, this choppiness means it wants to go up somehow. It wants to go up eventually. When it got picked up, it almost hit my profit, and then it retraced. That was a little bit scary. I did follow my rules and put my I don't know why this is 0.2. I just noticed that. Um, I did move my stop up to the break even. Fully expected it to be like, this is one of those times where it's not going to work, and at least I'll just break even. But then I was surprised at the end of the day when it rallied, and I was like, okay, so that's what I wanted and expected in the first move, but it needed to chop up some more people, an amateur orders first that are trying to scalp inside of this range. That's usually what nasty candles like that. That's usually what it's doing, is just stealing all of the stop hunting, pretty much all the scalpers that are trading really really small and really really tight. That's why I don't do that. That kind of stuff is more for a bot or an algorithm. But that's what this is. So